All right, let's dive in. National Bank of Canada just released its first quarter numbers for 2026, and wow, they are really making some waves. So today, we're going to unpack what's behind this absolutely massive performance and what it really means for the bank and its investors. Let's do it. So, to put it simply, the bank just knocked it out of the park to start the year. I mean, this is the kind of performance that gets everyone, analysts, investors, you name it, to really lean in and pay attention. So what's the big number that's got everyone buzzing? And here it is, the big one. Earnings per share, or EPS, came in at $3.25. Now, for a bank this size, pulling in that kind of number in a single quarter, that is seriously impressive. But what does that number actually mean? Well, it represents an 11% jump compared to this exact same time last year. Look, in pretty much any economy, getting double-digit growth like that is a huge deal. It puts them way ahead of what a lot of the experts were even predicting. Okay, so an 11% jump, that's fantastic. But that's really just scratching the surface, right? What's really driving all this growth? Where's it coming from? And maybe most importantly, can they keep it up? Now that's the real story we're going to get into. All right, first things first. Let's pull apart what exactly made this such a blockbuster quarter. We're going to look at the key pieces that really paint a picture of the bank's health right now. The bank's CEO, Laurent Ferreira, he basically laid it all out. This wasn't some one-trick pony. The success came from all over the place. Their everyday banking services, the efficiencies they're getting from their recent buyout of Canadian Western Bank, and their share buyback program. So it's really a story about success on multiple fronts. Okay, before we get to the next big number, we need to quickly talk about a key metric, return on equity, or ROE. The easiest way to think about it is like a report card for how well a company makes money. It tells you how much profit the bank is squeezing out for every single dollar shareholders have invested. So a higher ROE, that means the company is just really, really good at turning investments into actual profits. And get this, National Bank's ROE for the quarter was a super strong 16.6%. In the banking world, anything in the mid-teens is considered excellent. This number actually puts them ahead of a lot of their bigger competitors for the quarter, and that really just highlights how efficient their whole operation is right now. So yeah, the big picture looks great, but now let's go a layer deeper. Which specific parts of the bank were doing the heavy lifting here? So let's really nail down that question. Where was this growth actually coming from? Was it their high-flying investment banking division, or maybe their super steady wealth management group? Or was it the core of their business, just everyday banking for people and companies? And this is where it gets really interesting, because look at the balance here. Personal and commercial banking pulled in $442 million. Wealth management, a really solid $274 million. And then you have capital markets right up there with $443 million. They're all huge contributors. So here's the key takeaway. This wasn't just one part of the bank carrying all the weight. It's like the engine was firing on all cylinders. And that kind of broad, well-rounded strength, that is exactly what investors love to see, because it means the business is tough and isn't just relying on one thing to succeed. Okay, and a massive part of this whole story is that recent acquisition of Canadian Western Bank, or CWB. Whenever big banks merge, the real test is always how well they actually combine everything. So let's see how that's going. The magic word you always hear in any acquisition is synergies. It's really just a fancy business term for all the benefits you get when you stick two companies together. Cutting redundant costs, selling new stuff to a bigger customer base. The whole point is that the new combined company is worth more than the two separate parts ever were. And wow, this chart right here tells a really powerful story. You can see their goal for synergies in the first year was about $135 million. Well, they've already completely blown past that, hitting $176 million already. They are way, way ahead of schedule on what is a really critical part of this merger. And the CFO, Marie-Chantal Gingras, she confirmed this herself. Beating a major integration target this early in the game, that's a huge sign that the execution of this whole merger is going incredibly well. Okay, so a massive quarter and a super successful acquisition. That's all great news. But what does it actually mean for the people who own a piece of the company, the shareholders? Well, one of the main ways a company gives value back is through a share buyback. In Canada, you'll often hear it called an NCIB. Basically, the company uses its own cash to buy its own stock right off the market. This reduces the total number of shares floating around, and with fewer shares, each one that's left can become more valuable, which also helps boost that earnings per share number we talked about.
And it looks like National Bank is going all in on this. They've announced they're almost doubling their buyback program, jumping from 8 million shares all the way up to 14.5 million. And this isn't just some future plan. They've already bought back 6.4 million shares. So they're actively putting that capital to work for their shareholders right now.
All right, so with a fantastic quarter behind them, the bank is now looking to the future. And they've laid out a really clear and, frankly, pretty ambitious roadmap for what's next. This slide basically lays out their game plan to push that already great 16.6% ROE even higher, aiming for over 17% by 2027. And they break it down step by step. Each step adds basis points. That's just a tiny fraction of a percent. So you can see they expect big lifts from just growing the business, getting more out of that CWB deal, another transaction, and of course, those share buybacks. The only thing pushing back a little is what's called RWA growth, which is essentially the capital they need to keep on hand to safely back up all their new business. All in all, it's a super detailed and very confident-looking plan. But, and this is a really important but, here's the key context. While they have these huge ambitions, raising their targets for this year and next, their whole plan is built on a pretty cautious view of reality. They're not banking on the economy getting any better or credit conditions improving. They've built a plan to achieve all this growth without needing a perfect economic forecast to help them out. And the bank's chief risk officer, Jean-Sébastien Grisé, he really hammered this point home. They know there's a lot of uncertainty out there, but they believe their conservative strategy and their strong mix of businesses have them ready for whatever's coming. It's a classic message of being cautiously optimistic. And that leaves us with this final massive question. You've got a bank that's firing on all cylinders, crushing its integration goals, and charting this really ambitious course for growth, all while keeping its feet firmly on the ground about the economy. It's a fascinating mix, right? And it really makes you wonder, are we watching National Bank redefine what's even possible for Canadian banking? I guess we'll just have to wait and see.